Some of you are just like, where you're like, well, my side gig's only making 20K a year. Okay, it's because you're working 40 to 50 hours a week for somebody else. Hey, friends. Well, it'd be nice if I pulled my mic up here so you could actually hear me, right? Party foul. Rookie move. Hey, good morning. Hi. We're going to talk about insurance today. Now, listen, okay? Actually, I'm going to fix my hair real quick. If you're watching me on YouTube, I just feel like my hair just kind of fell. I don't know what just happened, but here's what I want to talk about insurance. Okay. And please know that, like, sometimes I'm talking about insurance, but I'm not even talking about insurance, all right? Because I'm always surprised by the number of people who come to me with questions about what do you do with insurance, because they know both Jason and I are self-employed. Jason has his Fairway Finest golf apparel, so he's a business owner. We own a real estate company together currently with two Airbnbs in Florida. We sold the one in Arizona, and we are working with an agent right now to buy a third one at Lake of the Ozarks. So we have that company, and then my coaching company, of course. And so I am always surprised by the number of people who want to know not only what we're doing about insurance since we're self-employed. I'll calm down here in just a second, but this is like you're getting me fixing my hair. You're getting me messing with my shirt. Like, I just feel like if I'm looking right now at the camera, it looks like my head's crooked, guys. What's happening? But I'm not surprised about the number of questions I get about what we do for insurance. What I am surprised about is the number of people that use insurance as the reason why they can't leave their day job and go all in on their business, or what have you. That's usually what happens. Somebody will have a day job, and then they'll either have an idea for a business or they'll have a business on the side, but they think they can't leave the thing that's giving them the benefits, that they have to stay there, just usually for insurance, because the cost of insurance they believe is going to be so crazy if they were to try to get insurance outside of their employer. Okay, so let me just say this first of all. A lot of times, I personally believe that that's an excuse. Okay. Are there instances where people absolutely have pre-existing conditions? They have stuff wrong. They definitely have to stay where they're at for the insurance. I'm sure that there are, but I'm not talking about that. Okay. I'm talking about precious women of God who believe that they're supposed to be doing something, who are concerned, that they're in childbearing years, for instance. By the way, I popped out all three of our three biological children. Let's see. Two were under my husband's insurance. The third one, Ava Baby, was our most expensive, being self-employed. And Jason was doing real estate at the time, so self-employed also. So, like, I get it. But what I think more often than not is that people are using that as an excuse as to why they don't want to leave their day job and go all in on their business simply out of fear. Okay. Because the thing is, like, when people say things like that to me, what I want to say to them is, why are you betting on the person who has you employed, and you're basically putting all of your chips into their basket, assuming that they're not going to want to make any changes, that they're not going to, do layoffs, change the direction of the company, sell, whatever. Like, you feel safer putting your eggs in someone else's basket. We are not the same. Okay. We're not the same, because I feel safer putting my eggs in my own basket. And perhaps that's trauma response. If you did not listen to the trauma response podcast series that I did in the month of July, you should go listen to that. Perhaps that's what that is. But I mean, Jason and I have both been laid off from employers before, both during like critical times in our life when it's never convenient, right? But it was not very convenient to be being laid off. And so I know what it feels like to have something happen to you, which, you just kind of, it takes you by surprise. And I can just remember thinking, I never want to be caught with like our pants down like that again, where we are dependent upon somebody else to meet our bills. And so a lot of times when people come to me and they say, I want to leave my day job, but what do you do for insurance? What should I do for insurance? I got to get the insurance. I want to say to them, look, you've got like this perceived safety net with your daytime employer, but it's just perceived. And at any moment, that game can change. Those dynamics could change. So like, figure some stuff out. All right. So here is what I'll say. If insurance and getting insurance and what is insurance going to look like and it's going to be so expensive, if that's the only thing preventing you from going all in on your business, like it's not an insurance problem at this point. It's literally at this point, it's an education and an information problem. And so I want to talk to you today about insurance because you actually do have a lot of options. Back when I started my company in the year, it was 1999, actually got it real official in the year 2000. There were not nearly as many options, but there's so many more options now. Okay. So I'm going to kind of talk through some of these with you. And even if you have insurance through your spouse, or even if this doesn't apply to you, maybe you know somebody you could send this podcast episode to, or maybe you'll just learn something for fun. All right. Let me also just cover my butt saying I really don't know all that much about insurance, but I am going to tell you what I have researched, what we are personally doing, what we've done in the past, and hopefully just give you some thoughts and some ideas, and you can do the research yourself. Okay. Um, and so, you know, I know for some people, they think insurance feels like the safety net that they can't afford to lose, but there really are a lot of options and they really are probably more affordable than what you think. Okay. So I want to just share with you what I know so that you're not avoiding going all in your business for the wrong reasons. Because, like, once you know more, then you're responsible with what you do with that information. And so if you have thought to yourself, oh, it'll be way too expensive, but you haven't actually ever called and priced insurance, then you're just guessing, right? And we've got to be smarter than that, more diligent than that. So here are some options. And again, sometimes there are legit reasons you have to have the insurance, you have to stay. Very rarely do I think that that is the case. Now, I want, in full disclosure, to let you know, I ran a lot of my notes through ChatGPT. Okay. Because I wanted to make sure that something smarter than me, and we're going to say AI, was kind of looking through my notes, adding to or giving me some things that I hadn't already thought of. And so I just want to kind of like put that out there right at the beginning. I also want to make sure that you understand how much things have changed, especially with insurance, and a lot of the ways that people are still thinking about insurance, I think, are prior to the Affordable Care Act, which was in like 2014. So this was a decade ago. Okay, so before the Affordable Care Act was passed, regardless of what you think about that or what party passed it or whatever else. But before that, and I'm going to read the ChatGPT notes so I don't get this wrong, but insurers could deny you coverage if you had a pre-existing condition. So they could deny you for anything from asthma to pregnancy, which they considered a pre-existing condition, to cancer. And so, like, for those of you who have been worried about pre-existing conditions, like, I get it, because 10 years ago that was the case. Also, before the Affordable Care Act, even if you got approved for insurance, premiums would be like astronomically higher than if you had a pre-existing condition than if you did not. And so a lot of policies prior to 2014 often had lifetime or annual limits, meaning you could run out of insurance if your medical bills got too high. Coverage varied wildly state by state. If you were shopping for like individual plans a decade ago, it was very confusing, very limited. And let me just say, I was, and we were. And so, I remember like asking all the questions and trying to do all the things. And so many people a decade ago, they literally had to rely on health sharing groups or go insured. Or stay in jobs they didn't want to just for the benefits because private coverage was just way too expensive. Okay. But then the Affordable Care Act did get passed in 2014. And so basically it guaranteed coverage. So companies cannot deny or charge more for pre-existing conditions is what the Affordable Care Act says. It also says that there are standardized plans, that every marketplace plan must cover the 10 essential benefits of like hospitalization, maternity, prescriptions, mental health. The plan also says there are no lifetime caps on coverage and that you could get tax credits. Like, it's based on income. Many self-employed people qualify for like huge subsidies, sometimes even paying less than what an employer's plan would. And they did make it so that it should be simpler shopping. You can go to like healthcare.gov and state marketplaces, which would show you like state or side by side, like comparisons, like in a chart and stuff. So is it easier now or is it harder now to get coverage? Well, I think it's easier since 2014 for almost everyone, especially if you had a pre-existing condition. or a decent income to definitely get covered now. I do think that it's harder in some ways because premiums are usually still higher than if you are working for an employer. Okay. But often there are subsidies or there are tax deductions that people are not aware of that would be really helpful. Okay. The thing that I think most people forget is this. When you are self-employed, there is no cap on your income. You're not waiting for a 2% raise every year. You're not hoping that maybe you're going to get a promotion that's going to give you 10K more a year. Literally, the sky is the limit in terms of your income. So while right now you may work at a day job and you may have, your business on the side or whatever, and you're making, let's even say you're making $100,000. Okay. Let's say you're making $100,000. Um, like if you're going to be self-employed, I'm going to hope and pray that your business takes off to such a degree that the premiums you will have to pay for being self-employed and having insurance are just a drop in the bucket. And so I think people forget that, like the last corporate America job I had, I was making $55,000 a year, and that was back in the year 1999. And I never planned on being self-employed. And so, as soon as I decided not to go back to corporate America, and Jason and I made the decision for me to go all in with my painting company in Kansas City, and then I started having babies and, stayed home and just did all the marketing for the painting company, and then went all in on coaching back in 2017. But, I've never gone back to corporate. But, the first year, so let me just say this. And yes, I'm still fiddling with my hair because it's like I can feel my clip sliding down the back of my head. I don't even know what the problem is. So back in the year 1999, I had a job making 55K. Okay. The next year, when I was completely self-employed, I claimed $90,000 on my taxes is what I made. So I was making more in year one as a self-employed person. That I got a $35,000 raise. I gave myself a 35K raise. And again, this is 25 years ago, friends. I went from 55K to 90K in 1 year's time. And so there's no insurance even then that was $35,000 a year. Does that make sense? And so like as a self-employed person, please know that like the sky is the limit. If you don't have that day job you're going to where you're spending 40 or 50 hours a week, it's interesting because my kids, our two boys are now both adults and out in the wild and doing adulting and all the things. And they're at their job 40 some hours a week. Well, it's amazing when you're not at a day job 40 hours a week, what you can do growing your business. Some of you are just like, well, you're like, well, my side gig's only making 20K a year. Okay, it's because you're working 40 to 50 hours a week for somebody else. When you free up that time, imagine how much more you could grow your business and to what income level could you put it at if you weren't spending 40 or 50 hours doing it for somebody else. Okay. So, I think that it's interesting that so many people forget that if you begin to make more, those premiums are not going to be as hard for you to cover as what you think that they are. All right. So if you were self-employed before 2014, getting health insurance was kind of like, playing roulette a little bit. You could be denied, you could get charged a lot of money, you could be told you couldn't get coverage because of pre-existing conditions, like all of those things. But today it's totally different. And so let me give you, some thoughts and some ideas. All right. The Affordable Care Act, like I said, says that insurers cannot deny you anymore for pre-existing conditions. You also have no waiting periods for that coverage to kick in. And so, the Affordable Care Act, ACA, is one option for people with ongoing medical needs, but so is Medicaid. Okay. And so let's talk about other options that you might have. All right. So there was a period of time when Jason and I contacted like a private broker, an insurance broker in Kansas City. And this is during the time when, for a while I was on his insurance when he was still at corporate America. And then when he left corporate to do real estate for a while, we had an insurance broker who basically like shopped plans for us. found a provider and helped us find a good insurance plan for our family. That is definitely an option for you. Then later on, because then Jason went back to corporate for a period of time after the real estate market, did what it did back in 2009, 2010. So I was back on, me, the kids and I were all back on his corporate plan again. But then when he left corporate America back in 2017, we did Christian Care Ministries, which is an option for a lot of Christian people. So we did MediShare, which is Christian Care Ministries. I know Samaritan's Ministries has a really great reputation as well. So those are options. It's a lot cheaper usually every month, but it's not technically considered insurance. And it may not like cover pre-existing conditions immediately. So you're going to have to like do your research on that. But essentially, it's people paying money into a pot, a group of believers, Christian people all paying money into a pot. And then when people have bills, paying them kind of out of that pot. Does that make sense? But it's not technically considered insurance. And the problem with that can be that things like hospitals don't always recognize that as insurance. Some doctors don't recognize it as insurance. So you do have to do your due diligence. I know also a lot of times to get those types of like sharing types of policies, there, is paperwork where you're having to show that you actually like do attend a church, you are a believer, etc. Okay, because this is for like Christian people. So that is an option. Um, Doing like a high deductible plan and HSA, which is, great for like tax benefits, is definitely an option. Going on your spouse's company is definitely an option. If you are married to someone who has decent insurance, like that's usually going to be the simplest thing to do. And then also, if you're leaving a job, a lot of times your employer has to offer you COBRA for usually I think it's like 18 to 36 months and you pay like the full cost. It can be expensive, but we did that before too. In fact, we did COBRA before we ever did worked with a broker to get an individual policy. Then we did MediShare, and now we're doing essentially what is like Obamacare. It's what you get at marketplace.gov. And we have done that for the past year and a half, I guess. And I'm still not entirely sure my thoughts on it, but it is definitely for us at this period, it feels like the best option. So, open enrollment, just so you know, for what is considered Obamacare, but they don't call it that. You go to like healthcare.gov and they call it like a marketplace policy. Okay, so open enrollment is like November through January. There are special enrollment times. Otherwise, if you like lose coverage during the middle of the year or something, there are premium tax credits that can, definitely cut your rates. And there's a whole lot to choose from. Let me just tell you that. I feel like it's a little overwhelming. There's like different tiers. Like I think the bronze tier is the lowest monthly cost. It's higher out of pocket. Then there's like a platinum tier. It goes all the way up to that, which is like the highest monthly cost and the lowest out of pocket. So you just kind of have to figure out like, where do we land? It was back, when the kids were little, we did a lot more like wellness checks and they would have to go to the pediatrician and they're getting sick when they're, in elementary school. Now, I mean, it's very rare that we're going to the doctor, but there are things that happen like, Jason was in an accident and had to have 3 hip surgeries. Right now, I have a knee that I need to have surgery on. And so you've just got to kind of figure out and guess where you're at. But the bottom line for me is this: any insurance is it's freaking like a crapshoot. It really is, friends, because it's one of those things that you don't know if you're ever going to need it, and you don't need it until you need it. And then when you need it, you really need it, and you really hope that you had it. And so, my suggestion to you is to just do some research. I would call, for those of you who are interested, I would work, with an insurance broker. I would call them. Help should be free. Ask them, okay, this is, our situation. What can you find? What would you suggest? Okay. I would talk to your tax person about tax deductions and tax benefits because, your premium should be deductible if you are self-employed, or not eligible for like an employer plan, but of course, talk to them. I would reconsider. I had a friend who used to like every year sit down with her family and they would decide, okay, are we going to homeschool each of the kids this year? Are we going to do public school or private school? And based on each kiddo, they would kind of make those decisions. And I think you kind of almost have to do the same thing, not per kiddo, but like, you and your spouse or just you, like every year when it comes to insurance. What makes the most sense for us, do we think, in this year going forward? But I would also talk to your bookkeeper or your tax person about like funding an HSA to get, tax deductions for spending on medical bills. And so we do, like I said, we have a policy, our family is covered. But I do a lot of telehealth appointment friends with like doctor on demand. Those appointments are $75, which is usually cheaper than going into a doctor's office. And that way I don't have to leave my home. It's a matter of time for me. I don't like to have to go anywhere because I'm an introvert and time is money. And so if I can just do a telehealth appointment, I use doctor on demand all the time. When it comes to prescriptions, you can use GoodRx for prescriptions. I don't know if you're aware of that app, but Doctor on Demand is an app. GoodRx is an app, and get discounts on prescriptions. So we don't even always run everything through insurance because sometimes it's cheaper actually not to. And so, if insurance is the thing that's been preventing you from going all in your business, like that is just, in my opinion, unless there is some extenuating circumstance. So please don't get in my DMs and be like, well, I have this, this, and this, Jennifer. And so I'm offended that you said, okay, I'm not talking to you. Unless there is a circumstance that is just outside of the normal, there are options for you with insurance. And one of the critical things that I want you to remember is right now, if you're shopping insurance, whether it's with a broker or you're going to like healthcare.gov and looking there, which is what we did this year, or you're, doing MediShare or something. And those programs we had for children. I mean, I'm trying to remember how much we paid a month. It was less than $1,500 a month, I believe. And so, and in fact, I'm pretty positive that was less than 1,500 a month, which, might make you go, oh my gosh, we could never afford that. Okay, but you're looking right now at premiums through the eyes of your checkbook today while you're working 40 to 50 hours a week for somebody else. When you're not working 40 to 50 hours a week for somebody else, can you double your income? Can you triple your income? Like, don't just look at your current financial situation to determine if you're going to be able to do something different for insurance. I just think that you're forgetting that whole piece about when you make more, you can afford more. You can afford different. But sometimes you have to like get outside of that day to day, that safety net. Because see, a lot of times people will say to me, well, Jen, I'll leave my day job as soon as, the business really takes off. To which I counter, well, is it going to ever be able to really take off when you spend so many hours at your day job? And if you're like, but I work on my side business while I'm at my day job. Okay, well, that's stealing. Okay. Can I just call it what it is? That's not fair to your current employer. It just isn't. Also, your attention is so divided between what you do during the day and this over here. And I did a post on social media this week, and it was not a shock to me that it didn't get a lot of people, giving me high fives, because I think sometimes things sting a little. But when you have a day job, you're just not very hungry. You already have a way to meet your bills. You already have a way to provide. You already have a way to contribute or whatever. And so a lot of times it will take you having what we call a hungry belly in order to go all in on your business and really just balls to the wall, push on the gas, because it has to be successful. It has to make money because you don't have a plan B to fall back on. And so some of you, if you don't get rid of that plan B, like your plan A is never going to be the star because your attention is so divided. I've heard somebody say, it's like trying to chase two rabbits at once. Like you literally can't. So if you're in a day job still and you're like, gosh, I really need this, thing in the nights and weekends to really take off. Well, what would happen if it wasn't just nights and weekends? Would that be like you're thinking, I'll leave the day job when it takes off? And I'm saying, will it take off if you leave the day job? And then will it more than cover whatever you need to do for insurance? So listen, you all have self-employed friends. Message them. What are you guys doing for insurance? Like, don't just make the decision that we can't afford or we can't do this. As a entrepreneur, as an entrepreneur, not a, but as an entrepreneur, God has wired you to figure some crap out. Like that's how you've been wired. You are not supposed to be the type of people that just go, well, there's just no way I can do this. That's not how God innately wired entrepreneurs. Entrepreneurs, the majority of the time, by God, have been wired to just be like, I don't know what I'm doing, but I'm gonna figure it out. I have no idea, but I'm gonna see what I can learn. I don't know if this is possible, but I'm going to go all in. I don't know what's this, but I'm going to like that is the wiring of entrepreneurs. It just is. You have to be in order to go against what the majority of the people do, and thank God they do because we need people to, but the majority of the people are wired to work for somebody else. They aren't wired in a way that thinks outside of the box. They aren't wired in a way to take risks. They aren't wired in a way to figure stuff out, but you are. You are. So figure out the insurance and quit using that as an excuse. I am so rooting for you. If I forgot any other options, and you're watching this on YouTube, like any other options for, insurance stuff, would you put it just in the comment under this YouTube video? And if you follow me on Instagram, send me a DM there if you want. And again, if this didn't apply to you at all because you have insurance, you're covered, whatever, but maybe you can think of somebody else that would enjoy listening to this, please just do me a solid. Send this to them. I appreciate you so, so much. Thanks for being here, friends. All right. Bye-bye. Easton, did I make insurance interesting?